Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamilton, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today we're diving into the economic calendar for the week, looking at some key Canadian releases that are set to provide insights into housing, lending conditions, and the overall economic momentum. There's a lot to unpack, so let's get started.
That's right, Steve. This week, we're looking at housing starts and building permits, both of which are crucial indicators of construction trends. With higher mortgage rates, there's a lot of concern about how these numbers will reflect the market's current state.
Exactly, Janine. Housing starts, which will get data on Thursday, offer an early look at new residential construction, a critical part of the housing market, and a key indicator of broader economic health. In March, we saw a significant decline in residential building permits, especially in Ontario, which fell by 13.7%. That's quite a drop and could suggest builders are pulling back due to higher borrowing costs.
And even though there are declines, Steve, it's important to remember that the long-term trend remains mixed. Over the past 12 months, there have been 260,200 new units authorized. It shows that while there might be short-term challenges, the market's still moving forward.
Yes, and on Wednesday, we'll get the building permits data for March. Building permits are a leading indicator for future construction activity. In February, we saw a rise in the total value of permits issued, driven by non-residential projects, especially in British Columbia. However, on the residential side, permits fell due to declines in multifamily projects.
It highlights the complexities of the market. While non-residential construction might be booming in some regions, residential construction faces its own set of challenges. It's a balancing act, and these numbers help us understand the broader picture.
We'll also be looking at the Bank of Canada's Senior Loan Officer Survey on Friday. This survey gives us insights into lending conditions and loan demand. The previous quarter showed tighter lending standards, which is something to keep an eye on as it affects both businesses and individuals navigating the economic landscape.
And with all the economic uncertainty, understanding lending conditions is crucial for anyone looking to buy a home or expand their business. It's about being prepared and making informed decisions.
Finally, on Thursday, we'll have existing home sales and the MLS Home Price Index for April. The resale housing market has been cooling, with sales falling since November 2024. Prices have softened and the inventory picture has changed, pointing towards a more balanced market.
It's a challenging time for many, especially for those trying to enter the market. But it's important to focus on long-term goals and stay informed. That's why we're here, to help guide you through these changes.
Now let's turn our attention to a recent warning from the Financial Services Regulatory Authority of Ontario, or FSRA, which is cautioning consumers about unlicensed mortgage entities. This is a crucial topic for anyone involved in the real estate market in Ontario.
Absolutely, Steve. The FSRA has specifically named Donald Newton Mason and several entities connected to him, such as Mason Built Financial Inc., Mason Built Financials, and 1,111,224 Ontario Inc., as operating without the proper licensing needed to broker mortgages here in Ontario.
That's right, Janine. It's important to note that engaging with unlicensed individuals can leave consumers with fewer protections under the law. The FSRA has highlighted that these unlicensed parties might not fully understand the mortgage products they're recommending, which could lead to consumers ending up with unsuitable products for their needs.
And it's not just about the lack of understanding, Steve. The FSRA reported that Mason and his affiliates have been reaching out to consumers through various means, like in-person visits, phone calls, and emails. They've been presenting themselves as mortgage experts or investment advisors, even encouraging vulnerable groups like seniors to downsize and invest the proceeds with them.
The regulator has provided specific addresses and contact details associated with Mason's operations, including locations in Pickering, Oshawa, and Toronto. They've also listed phone numbers and email addresses that consumers should be wary of. It's a reminder of the importance of verifying the credentials of anyone claiming to be a mortgage professional.
Exactly, Steve. The FSRA has emphasized that anyone dealing in mortgages in Ontario needs to have a valid FSRA license. Their licensing process ensures that professionals meet rigorous qualifications and ongoing education requirements, which helps protect consumers by ensuring they get the right advice and products for their situation.
And for those who believe they might have been defrauded, the FSRA is urging them to contact their local police department. It's vital for everyone to be cautious and informed when dealing with financial transactions, especially in such a significant area as mortgages.
That's why it's always a good idea to check the FSRA's online registry to verify if a broker, agent, or mortgage firm is licensed. Being informed is the best defense against potential fraud and ensures you're working with someone who has your best interests at heart.
A recent federal report has revealed that a significant number of Canadian mortgage holders are grappling with debt challenges. It's quite alarming to see how widespread this issue is across the nation, Janine.
It really is, Steve. The report highlights that many Canadians are finding it difficult to manage their mortgage payments alongside other financial obligations. This is particularly concerning given the rising interest rates we have been seeing.
That's a key point, Janine. With the Bank of Canada maintaining a higher interest rate environment, the cost of borrowing has increased, putting additional strain on households. The report suggests that a majority of mortgage holders are feeling the pinch, which could have broader implications for the economy.
And beyond just the numbers, Steve, there's a real human impact here. Families are having to make tough decisions, perhaps cutting back on other essentials to keep up with mortgage payments. It's important to remember the personal stories behind these statistics.
Absolutely, Janine. As the report points out, the Financial Consumer Agency of Canada is urging mortgage holders to reach out to their lenders at the first sign of trouble. Proactive communication can be crucial in finding a workable solution before things get out of hand.
That's right, Steve. And it's not just about contacting lenders. Seeking financial advice early on can also be a game changer. There are professionals out there who can help people navigate these challenging times and make informed decisions.
The role of Canada's Superintendent of Financial Institutions, Peter Routledge, was also highlighted in the report. His office is focused on ensuring that financial institutions are prepared to support borrowers while maintaining stability in the financial system.
It's reassuring to know that there's oversight and support at the institutional level. But Steve, I think it's vital for everyone to take personal responsibility too. Keeping a close eye on personal finances and being aware of potential changes in interest rates can make a real difference.
Agreed, Janine. The report serves as a wake-up call for both consumers and financial institutions. By working together, we can hopefully mitigate some of the risks associated with rising debt levels and ensure a stable housing market in Canada. A recent poll conducted by Insaga.com reveals that a staggering 87% of respondents in Ontario have no plans to buy a home this year, despite a noticeable drop in housing prices and an increase in listings. This reluctance seems to stem from the continued perception that prices are still too high for many potential buyers.
That's right, Steve. The poll, which included 1,386 participants, shows that only 13% of respondents feel this might finally be their chance to purchase a home. Even with prices dropping since their peak in early 2022, it appears that affordability remains a significant barrier for most people.
Interestingly, the report from the Toronto Regional Real Estate Board highlights that the average selling price in the Greater Toronto Area, at $1,107,463, has decreased by 4.1% compared to April 2024. Yet, despite this decline, the number of sales has also dropped by 23.3%, indicating a slowdown in the market.
It seems that while there are more homes on the market, with new listings up by 8.1% year over year, the economic uncertainty is likely causing hesitation among buyers. People are perhaps worried about the impact of high interest rates and the broader economic climate.
And it's not just the interest rates, Janine. According to Alekia Berry-Spruill, the president of the Toronto Regional Real Estate Board, the recent federal election and concerns about trade relationships with the United States are also contributing to the cautious approach among prospective buyers.
It's a complex situation, Steve. While there's hope that improved consumer confidence and a more favorable trade relationship could boost the market, it's clear that many households are still closely monitoring these developments before making any major financial commitments.
Absolutely, Janine. The current state of the real estate market in Ontario reflects a broader economic sentiment. While some experts hoped for a spring boost, it seems the market is still feeling the effects of last year's sluggishness. The key takeaway here is that while prices are coming down, it's the economic uncertainty that's really keeping potential buyers on the sidelines.
That's why it's more important than ever for buyers to stay informed and consider all factors before making a decision. While the market may eventually stabilize, knowing when to take the plunge requires careful planning and understanding of the current environment.
In the latest update from RE/MAX Canada, we see that the Ontario cottage market is pausing amidst economic uncertainty. The 2025 Cabin and Cottage Trends Report highlights that both buyers and sellers are feeling hesitant due to concerns over employment and the direction of tariff negotiations by the federal government.
That's right, Steve. The report mentions that year-over-year prices have declined in half of the regions analyzed, with decreases ranging from 1.0 to 20.3%. This includes areas like Niagara-on-the-Lake, Peterborough County, and northwestern Ontario, largely because of increased inventory.
Meanwhile, the other half of the regions are experiencing price increases due to limited inventory. For example, Simcoe County and Prince Edward County are seeing tighter markets with more demand than supply. It seems there's a split in the market trends across the province.
Yes, it really shows the diverse nature of the cottage market in Ontario, Steve. Families and retirees from the Greater Toronto Area are driving demand, while northwestern Ontario is attracting those returning to familiar communities. It's a reminder that real estate is local, and each region has its own dynamics.
Looking ahead, the report suggests that 60% of Ontario cottage markets expect price increases, with pent-up demand adding pressure on existing inventory. On the flip side, 40% might see price declines as more listings hit the market in the warmer months.
With all this uncertainty, it's understandable that buyers and sellers are cautious. While waterfront properties remain in high demand, other considerations like access to recreational activities and larger lots are also top priorities for many.
That's true, Janine. The report also emphasizes the importance of good Wi-Fi access, especially as many buyers are considering cottages for both leisure and remote work purposes. It's interesting how lifestyle changes are influencing property decisions.
Indeed, Steve. And with some regions seeing cottages as primary residences due to affordability issues in urban centers, it's clear that many are seeking a lifestyle change. People are looking for more than just a vacation home. They want a place that aligns with their long-term goals and family needs.
As we wrap up today's episode, it's clear that the Ontario cottage market is reflecting broader economic sentiments. While some regions are seeing growth, others are facing challenges. It's a dynamic landscape that requires careful navigation and informed decision-making.
Absolutely, Steve. For anyone considering a move into the cottage market, it's essential to stay informed and consult with professionals who understand the local nuances. That way, you can make choices that are right for you and your family.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.